this week rather, there was a bit of a mix up with some of the sessions and all of that stuff, but I decided to record an additional session just for the guys who were around for the previous session, but it was cut short. All right, so the session was cut short, so I decided to record something later on in the evening, probably around 10 or 11 p.m. Once I saw that the recording was like 7 minutes. So hopefully that's gonna prove helpful. Just make sure you download that and you go over um, those videos for this week. Okay, it should prove very helpful, especially I think the one that we did on Tuesday. I especially like that one because I don't really talk a lot about the what we discussed on Tuesday. And if you did go over it, right, so if you did watch the session and sort of like take in what we spoke about and try to apply it and try to apply what we spoke about, then I'm pretty sure you can see what I'm talking about when it comes to those round numbers or big figures. So, that's not something, like I said, don't really talk about it that much, okay, but it is a powerful tool that you can use in order to sort of like jumpstart your trading, okay. So right now we have the NASDAQ 100 open, and I think last time we looked at it was probably on, I don't know, Wednesday, okay, but we're looking at a buy situation at 9,800, okay, at 9,800. All right, it's pretty simple to see why you'd want to be a buyer there. I'm not sure if it was Monday or it was Tuesday evening, whether we're looking for the return or this initial bounce of this 9,800. But all in all, we've been looking at the NASDAQ for the past couple of days as an upward or a buy situation, right? We'll be looking at the NASDAQ and looking for opportunities or pullbacks to simply buy in line with what we perceive to be sort of like the midterm trend. Okay, now I've already mentioned this and we've already done this before, but I want to emphasize it again. If you have an opportunity to buy something, right? If you have an opportunity to buy a cell phone, for example, or a laptop for 1,000 Rand, or you have an opportunity to buy the very same laptop or cell phone for 850 Rand if you wait a week or two, right? Now, the logical answer for that, for someone who's more or less like me, would be to wait a week or two to get sort of like the better price, right? Because if you're talking 850 bucks, and $1,000, that's like, I don't know, 150 bucks saving. And that is essentially the reason why you see markets pull back a bit, even if the major directional bias is up, it is long. So you see those pullbacks simply because the big boys, right, a lot of the major institutions aren't looking to buy anyway. They're not looking to buy at 10,000. When the market reaches 10,000, okay, as the NASDAQ is trading around 10,000, they're a bit hesitant to just go long at 10,000, okay. They'd rather see the market, let's say, pull back to 9,800 or to 9,900 or to 9,000, okay. So that would be a much better buy situation, especially now if you have a lot of lots that are on the line, okay. Doesn't really make that much of a difference, or you don't really notice it. Rather, it does make a difference, but you don't really notice it if you're still trading at 0.01. Okay. But if you are trading at much larger lot sizes, it does become somewhat of an advantage if you can actually take trades based off good entries. All right, good entries allow you to have tighter stop losses, okay, or reasonable stop losses. I hate to use the word tight when it comes to stop loss, because you don't want your stop losses to be tight. We all know what happens to tight stop losses. So let's just say reasonably sized stop losses. So it allows you that key advantage. So if you get a trade opportunity, let's say if you buy at 10,000 rather, okay, as opposed to waiting for the price to return, let's say back to a logical level, right, based off technical analysis. You're not going to just look at a chart and say, yeah, I want to buy at 9,800 because it's a nice round number. No, it has to align with your technical observation, right? Whether through looking at the moving average, right? Where the moving average is in relation to the market price, what is the trend? Okay, is the trend up or is it down? Right. We throw in the Fibonacci, right? So grab our Fibonacci tool and we take, let's say, the retracement and be like, okay, from this swing low here, pretty sure. Yeah, this is the chart that I typically use now, guys. This is the one that doesn't have all these other levels. So if you're looking at the Fibonacci retracement I was talking about the previous session, this is it. I don't use 23.6 or 32 point something. I don't really care much about those levels. I'm not saying you shouldn't as well, but for me, okay, I think I might have to throw in a bit of a side note about why I use that. I'm not sure if I'm ready to do that right now, but I prefer to see the market pull back into that 50 to 62%. Right? Bear in mind, I always convert the 61.8 just to 62. Right? So I'm triple ADHD like that. So when I get this, right? So when I get this, it just shows me that there was a bit of profit taking at this level here, and we can call it a bit of a bargain when you can buy the same NASDAQ 100 an hour or two later for 97.26 that you probably would have bought for 10,000, right? So it is somewhat of a bargain, okay? And if that's the way you wish to think about it, okay? So that's sort of like the simplest way in which I can explain it. I mean, there is no other way that I can sort of like phrase this, but by just saying the markets will have provide you an opportunity to get in at a better price. The market pull back 10, 15 pips before rising and sort of like taking off. Now those situations are normal, so that sort of thing does happen. That sort of thing does happen in the market. However, it shouldn't deter you for waiting for the right sort of opportunities, right? Because what's important is being able to have a consistent way of looking at the markets, right? You can't have consistent profits in the market if you look at the markets in a I don't know how to say, in a spontaneous sort of way, right? So today, your main way of looking at markets is using the stochastic. Tomorrow, you like to use the trend line. The following day, you just want to use the moving averages. So that is an inconsistent way of looking at markets. And it's very difficult to make consistent profits with that sort of approach. So let's say placing the Fibonacci allows us much better entries, okay? And it allows us to wait, right? If you let the market come to you, it shows, I can say, a bit of, I don't know, sophistication in your trading as opposed to someone who's drawn in. Because a lot of the time you might watch the market, right? Because trust me, if you sit down and watch the markets all the time, you'll see this market pulling you towards a buy. And if it's dropping, it's going to like pull you towards a sell. However, if you have a predetermined entry point in the form of a retracement to 50% of this entire move, so let's just say this entire move was 100, okay, you know, if the market pulls back about 50, it allows you a much better entry. Okay, now as I was saying with the stop loss part of things, it's critically important because, right, so if you will be placing your stop loss at a previous swing low point, would it be better for you to place your stop loss at this swing low, right? So there's a swing low. Okay, so below the swing low, we're looking at a buy. So you buy at 10,000 and your stop loss is at 93.26, as opposed to waiting for price to return to a, let's say 97.20. Okay, and this would be your entry. Boom, there is my entry. And there is my stop loss, right? You can see that already sort of like reduces the size of your stop loss just by making sure that you wait for the entry to come to you, right? As opposed to chasing the market, right? Trust me, chasing the markets long term is not going to provide you with any sort of sustainable income. If you want consistency, right, especially on the profitability side of things, right, you can consistently lose money, right? But if you want to consistently make money, okay, on average, then you need an approach that will allow you to sort of like pre-plan all your trades. So this is sort of like the best and simplest way in which you can do it. But I don't see any other way aside from just obviously throwing in the moving average, let's say one moving average, to help you sort of like pinpoint where a really good entry would be. And let's just say a previous market structure. In this example, I think I chose this 9800 level. Okay, so this 9800 level, the one that we looked at a few days ago as where we'd like to buy the market at. And that was based off not only market structure, okay, but also moving average, right? And also the pullback, right? You need to wait for the market to basically come to you, because if you're always looking to go towards where the market is, it's always going to pull you in this direction. It's going to pull you in that direction. So we have our spot, right? We've identified our trading zone. If the market lands here, we are trading. If it doesn't, we are not trading. All right. So I know it seems very simple and very basic right now as we're talking. Your blood sugar levels are like at normal. Your heart rate is also normal. But when you're actually trading and you're looking at the market, as your pulse starts to raise and your adrenaline, like, yeah, let me get into this one, let me get into that one. By the time after 20 minutes, you're already in 15 trades. It's very difficult to sort of like maintain that sort of composure that you do have right now. So what I suggest, pending order, right? Pending order is one of the most easiest and most, I can say, I don't want to say stress free, because I really don't believe that the markets can become stress free, but the easiest way to alleviate a lot of the stress, right? When you're sitting and watching the market and saying, okay, if this does happen, okay, I'm just hoping for this market right now trading at 10,000 to come back down to 97.20, right? And all of a sudden you start to see this candle move to the upside. Okay, start to feel a lot of anxiety, and then you're like, yeah, let me just jump in just this one time. And then of course the market will pull back down, come back into your intended trading zone, and you'll probably get stopped out, and you won't have a pending order now. And sometimes you don't even have the sort of like the staying power or the wherewithal to say, okay, let me jump back into that trade. Okay, you lost some money on the original trade, and you're like, nah, let me just keep out now. And the market goes right into your trading zone and sort of like heads in your direction. Next week you look at it, start kicking yourself, throwing your laptop on the floor, throwing your phone out the window. And of course that really doesn't help much with anything. Okay? But it can become a bit of a frustration. So learn to become very proficient with using pending orders, because they can alleviate a lot of the screen time as well. Because if you have a trading strategy that allows you to place a pending order and sort of like leave it, number one, okay, it helps you to avoid a lot of the trading mistakes that can happen. Okay, like boredom. People trade because they're bored. Right. If you feel the need, I think this week we probably had like one or two trades the entire week. Like the whole week there was like one or two trades, and there was this one day where I was like out of it, so I couldn't trade. And on that day I think I saw like two or three potential trading opportunities that I could have taken. But I mean, I'm pretty happy with two trades for this week. Okay, as long as I know that obviously next week markets will set up quite nicely. All right, the markets that don't set up this week will probably give you trading opportunities next week. I mean, you have a wide variety of markets you can look at. Right? Aside from FX, you have commodities, you have indices. I mean, you have equities. You can trade till your eyes bleed and your fingers break, but you want to be able to sort of like be selective in the trading opportunities that you take. Some weeks will have 2 trades, some weeks will have 20 trades, right? Good high probability trade setups, and that's what you want to take advantage of. So, in placing a in placing your stop loss and your take profit, obviously it needs to be in line with whatever market that you are trading, right? There is no sort of like generic take profit and stop loss level. Okay, there is no generic level where you're like, okay, 50 pips take profit, 50 pips stop loss for each and every single market, each and every single instrument. It's very difficult to do that. So it will involve you basically having to go through a bit of back testing, seeing what works, what doesn't work. So if you have any questions regarding how to place a penny order, okay, I will throw in the link in the Telegram channel for you to watch that video. It helps a lot. Okay. And if you look at strategy 1 of the trading ebook, right, which is also in the Telegram channel, it will give you detailed, I mean, as much detail as I humanly could master in that particular strategy, detailing how to anticipate where the moving average is going to be, where the big figure is going to be, where your trade should be, where your stop loss should be, what would be the selecting criteria for each and every single trade. And if you go through that document diligently, it will significantly help you to reduce a lot of the stress involved with just sitting there waiting for trade setups to basically um, happen and you just chase them. Okay. All right. Any questions? Okay. All right, guys. So if you guys don't have any questions, I'll be ending off tonight's session here. I mean, this was one of those sessions where we were like, okay, since I felt like we didn't really have enough time during the course of the week, we decided to add one more session. And yeah, I really hope that you guys enjoyed it. And for the guys who are in already the Telegram signal group, okay, welcome guys, and make sure that you go through the document, right? Make sure you go through the document. It really just does help to also understand what your lot sizing and all of this stuff should be. I won't go on about that. But if you need any assistance, right, the new